You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, Emini Nation. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is private, members only, and those taking the 1-week free trial. If you've not taken the 1-week free trial, when Michael joins us a little later in the broadcast, about 12:50, he will show you, he'll walk you through step by step how to take the trial. And when you take your 1-week free trial, you're not just gaining access to the live training room. What happens is for 5 consecutive trading days, we treat you just like a passport holder. You not only have access to the live training room, but you also have access to all the other resources and everything that happens the other 22 hours of the day. When the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, go to mytradingiq.com, scroll down the page to where it says afternoon broadcast, click the link, fill out the 30-second registration form, and you're done. Going forward, what will happen every trading day, about an hour before this broadcast starts, you'll get an email. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of doing it that way is you have access to the question box so that you can ask questions and be a part of the discussion. Now, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. I'm guessing you already have the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's also a great way to get to know who we really are. Not just today, not just this week. But thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year. Do the same thing. Now, obviously, the more recent broadcasts are going to be more important because they're going to help you relate to what's going on in the markets right now and in the world right now. But there's an awful lot of history in those 2,600 plus episodes. So if you're ever looking for something to do on a rainy day, youtube.com/CFRN. Our daily schedule each day, we start out with our daily devotional, word of prayer. Then we get into some market news, then a recap of the alerts, both the Logic 247 and the Concierge Trade Alerts. About 12:50, Michael will join us and give us a recap of everything that happened this morning in the live trading room. Then at the top of the hour, we'll go live on the TradingView platform, do some live trading for 30 minutes. Then I'll come back and I'll finish the recap of the alerts if I haven't already finished them. And then we'll wrap it up with our good word for the day. So let's get cracking. Now, this is the final day of our current devotional topic, the complete Bible answer book in 5 days. So if you missed the first 4 days, well, you could always go check them out on our YouTube channel. Today's scripture is Exodus 4, verses 11 through 12, and I'll share with you from the Message translation. God said, "And who do you think made the human mouth? And who makes some mute, some deaf, some sighted, some blind? Isn't it I, God? So get going. I'll be right there with you. With your mouth. I'll be right there to teach you what to say." Now, we just talked about mute and blind. It's probably a question that's hung over your head as long as you've been a Christian or been a Bible reader. Is Satan always the cause of sickness? It's a very valid question. If you tune in to Christian television on virtually any given day, you can hear the faith healers screaming at satanic spirits of sickness ranging from asthma to arthritis. You just got to send a check. But all kidding aside, is Satan really behind every sickness? While Scripture makes it clear that Satan is often the agent of sickness, he's not always the author of sickness. Sometimes God is. For example, in Exodus 4:11, God himself asks the rhetorical question, who gave man his mouth? Who makes him deaf or dumb? Who gives him sight or makes him blind? Is it not I, the Lord? In 2 Kings 15:5, we read of the Lord striking King Azariah with a skin disease from which he suffered till the day he died. And in Luke, the angel of the Lord, came directly from God's presence to strike Zechariah with an affliction because he doubted God's word regarding the birth of John the Baptist. That's Luke 1:19. Furthermore, we live in a cursed creation in which aging is the primary sickness of humanity. Thus, humanity's fall into a life of constant sin terminated by death, rather than Satan, is by far the primary cause of sickness. As we get older, we all get wrinkles. Some of us need glasses. Our muscles get weaker, and eventually we all die. Since the fall of humankind, both the righteous and the unrighteous have been subject to sickness and disease. Finally, it is crucial to note that this world is under the sovereign control of God, not Satan. Thus, we can rest assured that even in sickness and suffering, all things work together for the good of those who love God and are called according to his purpose. Romans 8:28. For the child of God, the hope is not perfect health in this lifetime, but a resurrected body in the life to come. As John the Apostle so beautifully put it in Revelations 21, there will be no more death, or mourning, or crying, or pain. For the old order of things has passed away. He who was seated on the throne said, I am making everything new. Join me in a word of prayer. Heavenly Father, we come before you today, acknowledging your sovereignty and power. As you reminded Moses, you are the one who has given us our mouths and the ability to speak. Lord, we ask for your guidance and strength, especially in times when we feel inadequate or unsure. Please be with us, Lord, and help us trust in your wisdom. Fill our hearts with confidence, knowing that you will teach us what to say and how to say it. May our words bring glory to your name and encouragement to those around us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Everybody's been working for the weekend, and by golly, here it is. Okay, here come the numbers from around the world, starting in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 730 points, almost 2%. The NASDAQ is up 193, well over 1%. The S&P 500 is up 70 points, over 1.25%. And the Russell 2000, or man in the street, is up 27 points, 1.25%. In the commodity basket, crude oil down $1.19, trading 77.09 last. That's a drop of 1.5%. Gold bouncing back a little bit today after yesterday, up $31.30, trading 23.8480 last. That's a gain of almost 1.5%. Silver is unchanged on the session. In the Asian markets, at the close, the Nikkei dropped 202 points, the Shanghai rose 4, the Hang Seng gained 16. No movers, no shakers there. And in the European markets at the close, FTSE up 99, 1.25%. The DAX up 118, and the CAC up 90, 1.25%. So that gave us a mixed day in Asia. It was a green day for the UK, and so far it is a green Radio Friday here in the US of A. Now let's see what's behind those numbers. A couple news articles here for you. A historically high number of new homes are up for sale in the U.S. South, thanks largely to Florida and Texas. There were 293,000 newly built houses still on the market in that part of the country in June, topping the previous high of 291,000 set in August of 2006. Now, that's based on data released this week. Supply is tight elsewhere in the U.S. as high borrowing costs discourage sellers from listing their properties and developers race to build more new homes. The South doesn't have that problem, especially in Florida and Texas. And that dynamic might provide an advantage to home buyers in the near future. The glut of new homes may eventually help push down prices, which remain well above pre-pandemic levels. There's a measurable correction already occurring in the market on list prices, but it's still a fraction of what the appreciation was. Now that comes from the CEO of Reventure Consulting, a real estate analysis firm. Pulte Group CEO acknowledged the increased inventory of new and previously owned homes in Florida and Texas, telling analysts this week that orders for new Pulte homes were down 9% in Florida and off 8% in Texas in the company's second quarter. So how did this happen to the South? At a time when other regions of the country are struggling to provide enough homes for the people who want them or can afford them. It all goes back to the pandemic, when people migrated away from certain pockets of the U.S. Florida and Texas in particular became popular destinations. Investors and builders followed, ramping up development during a period of mass relocations. But these states are no longer the draw they once were during the pandemic. The COVID area migration is waning, even reversing in some metropolitan areas. Florida, which had reigned as the most popular move-to state, now ranks third, according to Pods, a moving and storage company. Austin, Texas, a top 20 move-in city during the pandemic, is now the number 5 move-out city this year. South Florida is third. You have a little bit of what's called a boomerang migration occurring, where a lot of the people who moved into Texas and Florida during the pandemic are now leaving. Some of that's happening because people are getting called back into the office. Other people are getting laid off. Maybe they work in tech. Other people are just going back to where they came from. I think there's more to that story, but we'll leave it at that. Nearly a week after the massive IT outage shut down computer systems around the world, cybersecurity company CrowdStrike issued a statement yesterday revealing that a single software update was responsible for grounding planes, curtailing hospital procedures, and closing businesses for days. The announcement came as the majority of companies returned to business as usual, but it points to the vulnerability of our modern internet infrastructure and how taking out even a relatively small number of devices, Microsoft estimates 8.5 million systems were affected, can impact our lives. What we see here is the cascading effect that a minor software update, or in the future maybe a cyber attack or malicious code, can have a really huge impact. And without some kind of broader plan to address the matter, another widespread outage is all but guaranteed to happen. What we're seeing today in these types of cascading failures occurring more and more frequently, these will continue as we see AI and as we move forward, that these types of failures, whether they're accidental, the result of bad programming such as CrowdStrike, or malicious attacks, will continue showing the vulnerability of our technological world. They say what goes up must come down. But if you're the current stock market, coming down has taken a wild turn that may be on the cusp of straightening out. We think this is the time for consolidation of the gains, according to Morgan Stanley's chief investment officer, Mike Wilson. Wilson believes that stocks are headed for a 10% correction in the third quarter, on the back of thin summer trading volume and yawning worries about the presidential election in November. By and large, the market has sidestepped correction calls from Wall Street for much of the year. The S&P 500 is up 14% year to date, and strong corporate earnings and anticipation of interest rate cuts this fall. The NASDAQ composite is up 13% this year, powered by AI optimism. And the Dow Jones Industrial Average has clocked in with a respectable 6% advance. But cracks are emerging in the bull thesis. The NASDAQ has been hit by almost 3% in the last 5 trading sessions due to valuation concerns, mixed results from Alphabet, and outright poor earnings figures from Tesla. Market darling Nvidia dropped by more than 5% in the past 5 days, while rival AMD shed around 10%. Over the past 10 days, the S&P 500 is down about 3%, while the NASDAQ down more than 6%. But it looks like we got a real comeback on the way today. You probably know someone who has had a problem with some type of opioid product, whether it was prescription written by a doctor or that sneaky fentanyl that keeps creeping across the border. Now, one of the pharmaceutical companies, Indivior, reached an $86 million settlement to resolve their role in spreading opioid addiction across the United States. Emini improperly targeted sales of its products to doctors running pill mills. She also said it failed to monitor suspicious orders, causing its products to fuel opioid addiction instead of treating it. Apple Incorporated has signed U.S. President Joe Biden's voluntary commitments governing artificial intelligence, joining 15 other firms that have committed to ensuring that AI's power is not used for destructive purposes. The original commitments, announced in July 2023, were signed onto by firms including Google and OpenAI partner Microsoft. In September, 8 more firms, including Adobe, IBM, and NVIDIA, signed on. And the Fed's preferred inflation gauge showed prices increased slightly more than expected in June. PCE index, personal consumption expenditures, which strips out the cost of food and energy because none of us use that, and is closely watched by the Federal Reserve, rose 2.6% over the prior year in June, above economists' estimate of a 2.5% increase, and unchanged from the month prior. Still, the print marked the slowest annual increase for core PCE in more than 3 years. So that's the news that's fit to read. Let's go to Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude and gold and silver, the euro and bonds. We're currently in week 312. Over the last 312 weeks, we've issued over 17,300 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week has been a very busy week. Since the markets opened Sunday night at 6 p.m. Eastern through 8 a.m. Eastern this morning, we've issued a total of 102 alerts. 12 never triggered, so waiting on the outcome of 22. That gave us 68 actionable alerts, of which 10 or 15% would have been stopped out, again based on market structure and that very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock and we have traders around the globe. Their day session is our night session and vice versa. Each logic alert has an entry price, an initial target designed to help you get your goal for the day, and then often additional targets and a final trade to target. The purpose of the logic alerts is not so that you can just trade them and not have to worry about learning how to trade. I know some people make the mistake of using them that way, but the real purpose of the Logic 247 alerts is to help you learn how to read a chart. Now you might say, well, I already know how to read a chart. Well, the logic alerts teach you to read the chart the way we read the chart. And if you want us to teach you how to trade, then you need to learn to read the chart where we do. the way we do. And so when an alert comes out in a market that you trade, you go in and you draw a horizontal line at the entry price, a horizontal line at the initial target, and then a line at all the additional targets. And then the final trade to target on a long alert will always be the weekly zone above, and on a short it will be the weekly zone below. If you will repeat this exercise day after day, alert after alert, pretty soon you'll be able to read the chart the way we do. You'll be able to spot the windows of opportunity. Remember, your goal is simply to earn $100 per contract per day. First, you start in demo. You put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Then our 24/20 blueprint will give you the green light to go live with one contract. Now, that first contract is funded with your startup capital, the money you use to fund your account. Once you go live, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now, the beauty of the second contract is that you're adding it with profit you earned in the market. Blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. By then, I guess you should have the hang of it, right? But you only add one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow that as it's laid out in the 24/20 blueprint, it makes it far more difficult for you to blow up another account. Now, once you've done that exercise, remember, you got to show up, you got to do the work, you got to ask the questions. But once you've done that work in Logic 247, then there's our original alert service. Kind of put the cart before the horse there, but that's just me. Concierge trade alerts. They don't come out around the clock, but they do help you find out whether or not you've learned how to read the chart properly. The CTAs are published as a static report shortly after the Globex Open each evening, starting Sunday night through Thursday night. We all know today's the Friday session, but the Friday session began last night at 6 p.m. Eastern. At 6:05 p.m. Eastern, all of our members and trial members had every one of these targets 5 minutes after the open. So what do you do with these? Well, go to the 30-minute chart of whatever markets you actually trade and make note on the 30-minute chart where price is at the time the report is published. It will always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price falls below the 30-minute BBC, it's attempting to reach the short target. Now, this is where you get to look left and spot the entry and the initial target, the additional targets. This is where you find out if you really did learn how to read the chart with Logic 247. And if you find out that you didn't, well, you just go back to Logic and keep working on it until you do. The BBC is the green line you see on all my charts. It stands for bull, bear, cross. If price crosses above the green line, then we're bullish and anticipate higher prices. If price crosses below the green line, then we're bearish and anticipate lower prices. Now, all alerts are created on the 30-minute chart. There's nothing magical about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, there's no need to fix it. Now, the BBC, whether you put it on a daily, weekly, monthly chart, a 5-minute chart, a tick chart, a range chart, the concept is still the same. If price gets above the green line, expect higher prices. If price gets below the green line, expect lower prices. Also, this is the stage where you really start to learn how price behaves at a weekly trading zone. Now, that's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night until they close this afternoon, Friday afternoon, price is always trying to get to a weekly zone. How do you know which zone it's trying to get to? Well, if price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones each week for our members since December 14th of 2009. So this December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, carved in stone for the entire week. They do not change in any way whatsoever. Once you truly understand how price behaves at and around a weekly zone, the zones will become one of the most important tools in your trading toolbox. Just resist the urge to complicate things. As long as you know which way the wind is blowing and why, it's pretty simple to get your goal for the day. So let's take a look. Okay. Last night, we talked about, we had found support at the 38% fib retracement. We anticipated a pullback. We said the first area where the market would potentially find resistance would be this line right here. And price was stuck there for quite a bit this morning. The next place for major resistance is at the daily step line, which is aligned with the high of yesterday. We're in the process of getting a bearish cross. That's when the red line gets below the green line. It's been quite a while since that happened. Since we had our bullish cross here on May 8th, we've had a leg and a retracement, a leg and a retracement. The pullback holds more often than not, but we know eventually price is going to trade through, just as it did back here on May 3rd, and as it did here on July 18th, and then on the 19th. Now, the market found support at the 24% fib retracement, which bounced it up to the 38% fib extension. That resistance then sent us down to the 38% fib retracement. Whenever you hit a fib retracement on a daily chart, you should expect support and a bounce. And we're getting quite a bounce. I suspect we may get above at this point the step line, and we're going to have a confluence right here. But I anticipate the ultimate outcome is going to be another leg to the downside. You see, since May, we've been building, or April, we've been building legs to the upside. Leg retracement, leg retracement, leg retracement, leg. All-time historic high. Now we've been drawing legs to the downside. Leg, retracement, leg, retracement, and wherever this retracement ends, that will most likely become the beginning of the next leg down. And I think at a minimum, we'll see 53.70. Now, I don't trade a daily chart. You probably don't either. But I'll tell you who does. Institutional traders. The ones with huge accounts who trade in such incredible size that they literally move price. If you'll train yourself to spend just 2 minutes each day with whatever market you trade, looking at the daily chart, it can be futures, it can be stocks, crypto, Forex, ETFs, it doesn't matter. What you're doing is you're peeking over the shoulder of the deep pockets who move price. As long as you do what they're doing, it makes getting your goal for the day pretty simple. Now we were stuck right here where I've got the arrow pointing at this line that we talked about last night. We're stuck there for quite a while this morning. As you can see, we've rallied. Keep in mind that the high of yesterday is lined up with the step line. That's a potential for good resistance. You've got this line, and then you've got the daily BBC. Leg, retracement, leg. In fact, a retracement all the way back to the BBC, I think that would be beautiful, because that gives us more room to fall on the downside. This 62 is not out of the question. Now, does it have to unfold that way? No. You got to embrace all possibilities. What if buyers are suddenly convinced they can take it back to the all-time historic high? Fair enough. We get above the BBC, we get above red and falling. We've got this high right here. We've then got the 50% fib extension, the 62% fib extension, the all-time historic high, and then up here is the 100% fib extension. Again, I'm not asking you to trade a daily chart. I'm asking you to spend 2 minutes on a fact-finding mission, determining where major support and major resistance is, and find out what the deep pockets are doing. Because if you fight them, you're going to lose every time. As I said, all alerts are created on the 30-minute chart. Here's the ES. If you were tuned in yesterday, I drew in all of these windows of opportunity during the live broadcast. Now, this was the outlier. We said if something crazy happens and all of a sudden the market, breaks to the upside, this would be a nice window of opportunity, but that didn't happen. We didn't really expect it to, but again, you got to embrace all possibilities. What did happen? First window filled. We got a leg, we got a retracement, and then that first window filled again, and then the second window filled, and then the third window filled right to the tick. This was last night's open. We ran up to the BBC. Price was trapped between blue and climbing support and the BBC resistance. Once price gets above the BBC, then a pullback to the BBC becomes support. You can see here it was resistance, 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 resistance. These are all 30-minute candles, okay? But once we got above it, it became support. And it took us almost to the long target. So we had a leg, a retracement, a leg, a retracement, and then a leg that took us right up to the target. Resistance will always send the market looking for support. Support will send the market looking for resistance. Resistance sends us back to support. And now we're filling that window of opportunity that yesterday didn't seem possible, but it just happened. What I want you to take away from this is you don't have to make your trading decisions in the heat of the battle when bullets are whizzing past your head. Okay? Find your windows of opportunity and then sit back, put your feet on the desk, turn on some praise and worship music, and wait for price to get there. All 4 windows. Now, if you missed yesterday's broadcast, you can go to youtube.com/CFRN and you can see me draw in and explain the reason for each and every one of these. And they have now all filled. Okay. All right. To the Dow. Michael should be here momentarily. Here's where we opened last night. Got above the BBC. Consolidated for quite a few hours. Then at the zone, we consolidated. Only 3 things happen at a weekly trading zone. 70% of the time is this, consolidation. 20% of the time is this, rejection. 10% of the time is this, the slice. You see how this 30-minute candle sliced through the zone like it wasn't even there? When it ran out of steam, what did it do? It retraced to the zone it sliced through, and it continued in the direction of the slice. Now notice the step line here. That's the black line. On the way up, we had the perfect stack. Price, step line, blue and climbing, BBC. But that's about to change. This may be the high of the session. The step line, when it crosses, see how it's on the left side of blue and climbing? Once it crosses over to the right side, that's an indication that price will most likely retrace back to the BBC. Now the pullback holds more often than not. You can see it here. You can see it here. Eventually it will trade through, but it holds more often than it doesn't. There was never any reason to think about the short target, because in order to get to the short target, we would have had to break below this weekly trading zone. And that never happened. On the Russell, here's where we opened. Printing green candles. We're above the BBC. We overcome red and falling. In doing so, red and falling becomes blue and climbing. So we got a perfect stack right up to target. Consolidated at the target for quite a few hours. Then off we go to the highest weekly trading zone this week for the Russell. Resistance will always send the market looking for support. Support will send the market looking for resistance. And we may have found it here. We've spiked the BBC. 2 30-minute candles in a row. Now, if red and falling curls up and becomes blue and climbing like this, then wait for price to get above this high, and then you'll have tradable opportunities all the way back up to that zone. If this pullback doesn't hold, and if we drop below the step line, then you've got a beautiful opportunity from 2261 down to 2257. That's 4 points. From 61 to 57. You only need 2 points to get your goal for the day. And again, short target never came into play because we never got below this weekly trading zone. Now, these zones are the zones that were published Monday morning at 6:15 a.m. Eastern. Yesterday, support at the zone. The zone is actually 2204/2205. Okay. So again, support at the zone. And then we got resistance at the zone, which sent us all the way back to the BBC support, which this then sent us back up where we sliced the zone, came back below it, finally got above it, all in one 30-minute candle. Leg, little retracement, leg, a deeper retracement. And that deeper retracement at the close yesterday, where was the market? Sitting on support at the weekly zone. So what's happened today? Price has gone from zone to zone. From 2241 to 2285. That would be what, 44 points? Remember, you only need 2 points to get your goal for the day. On the NQ, we closed yesterday right at a zone. In fact, that's the lowest weekly trading zone for the NQ this week. We even dallied below it a little bit. But at the close yesterday afternoon, we were right at the zone. And from there, we rallied up to the BBC, consolidated, got above it, pulled back, held. We made a run. See this high right here from yesterday? Is that not this high right here? Sure is. Resistance sends the market to support at the step line. Back to resistance. Couldn't quite take out that high. Then a retracement back to the BBC, which held. Now you see these wicks, you go, oh, that didn't hold. Yeah, every one of these candles is still touching the BBC. It never pulled away. Once we overcame red and falling, right here with this green candle, this candle opened at 19,185 and ran about 70 points or $1,400 per contract traded. Michael's here, so when I come back, we'll pick up with crude oil. We've made it through all of the indices at this point. Michael will give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform. I'll be back. We'll finish the recap of the alerts, and we'll wrap up the week with our good word for the day.
Excellent. Excellent. All good stuff.
Okay, looks good.
Good. Here we go then. We'll go to the home page. All right, here we are. Now, let me refresh this page. All right. Good afternoon, everyone. Today is Friday, the 26th day of July, 2024. 26th day of July, 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com and click on the purple button right here. When you click on that, it's not going to bring you to that registration page. It's going to bring you to this registration page, where all that we ask for is your name, your email, your phone number. And down here, there's 5 multiple choice questions. And if you have Ninja, give us machine ID. If you have TradingView, give us your login ID. If you give us these IDs, then we will get your indicators indicating for you. If you do it right now, we get your indicators indicating for you over the weekend. So you have that in addition to all of next week. All right. Spreadsheet. We had a pretty good day today. It was good, and then it slowed down and it got It got off of good, and then it got back to good. So it ended up being good. Anyway, if you're going to read the spreadsheet, you can read all CTC risk disclosures down at the bottom. We had 63 ticks on the NQ. Now, we did not trade the NQ much at all because it was so jumpy and trading so thin. We got 41 ticks on the Russell, 37 ticks on the YM, and 13 ticks on the ES. That put us at 867.5 on the morning session. Today, it took 3 minutes and 2 trades to get to the goal for the day. At that point, we're up $2,850, and one of those was our NQ trade. Actually, we had 5 NQ trades. We had a plus 30, then another plus 30, and then a plus 4, and then a minus 1 somehow. That was our day on the NQ. Anyway, this one took 3 minutes and 2 trades to get to $2,850 with 19 contracts on. We took a total of 26 trades this morning, and that was with only taking 5 on the NQ. So we had a ton of trades this morning. There was a bunch of opportunity. The markets were really volatile. On the month now, we're at $9,675 over 18 trading days, averaging $537 per contract per 2-hour business day. So far, the way it's panning out, unless I have some really bad days next week, and we have 3 business days next week. Yes, 3 solid business days next week. This could turn out to be our best month of the year, and not only our best month of the year, our best month of the year and the highest daily average. Even if it doesn't turn out to be the best month, meaning we'll end up with over $10,745 per contract. I think we will. I don't think that's going to be an issue. I think it's going to be our best month of the year. But we're averaging $537 per contract per morning session. That's only trading half of the morning session. The other half of the morning session, doing the lesson plan most days. Today I went over a whole bunch of other stuff, not necessarily related to the trading in the room this morning. I went over the gold, and we went over crude oil, and we went into some other issues that the guys are having. So at the end of the day, we're averaging $537 almost per hour in the morning session with 1 contract. On the year now, we're at $56,760. That's over 138 business days, averaging $411 per contract per morning session. If you did the 2420 blueprint, which is going to turn out to be the 2020 blueprint, because you're going to be at 20 contracts at the end of next week. So it'll have taken us 20 months to get to 20 contracts. And I want to finish out the whole month with 20 contracts, doing everything that we normally do. If you were to do the 2420 blueprint, starting with 1 contract in January, we'd be at 7 contracts right now and averaging $1,619 per hour, working 46 hours. If you did the same thing starting in January of last year, you'd be at 19 contracts right now, same 46 hours, averaging $6,773 per hour. That's like $13 million a year if you worked a 40-hour week. Just saying. Doing that per hour is, you can't just put it out like that and say, working this and quitting when I got the goal for the day, I averaged this much per hour. You can't just say, I would be able to do that for 40 hours a week. You can't just say that, right? It doesn't work like that. But that is a huge number. Anyway, let's get into the actual trades. All right, we traded a little bit on everything and a lot on some things. The YM, we actually traded the most on the YM this morning. Now, I tried the whole strategy again this morning and it didn't seem to work out properly. They told me at the beginning of the week that was going to be done, but they didn't get around to it, looks like. So let's go back to the very beginning here. And there, should be the very beginning. Now, our first trade on the YM was right here, 6 minutes in. We got a break even on that one. And the next trade was right here, another break even. The next trade was right here on that one. We picked up 5 ticks, then 10 more to get us to 15. Then 30 on that one to get us to 45. Oops, 30 on that one to get us to 45. And then we stopped out. And that put us, hang on, there's a trade missing in here because we went up from 35 up to 57, and then we stopped out and went down to 47. And then we stopped out again. Somewhere we missed some nice trades in there. Missed some nice trades. A break-even trade, and we stopped out again. That put us down to 37. Then we stopped out again. That put us down to 27. Then we got 10 ticks profit there, and that put us back to 37. And I believe that is where we ended it on the morning session with the YM. Now, just looking at the blue arrows, there was one here that would have given us a break even, one here that would have been a nice profitable trade, one here, nice profitable trade, one here, break even, one here, maybe a break even, maybe a stop out, profitable trade, and this last one, profitable trade. That is the way it all came together with the NQ. Not the NQ, with the YM today. Sorry, with the YM today. It was so many trades, it was like it was the NQ. So many trades, it was just like it was the NQ. All right, so on the Russell right now. We had a bunch of trades on the Russell also. Let's scroll back like this, because honestly, the Russell and the YM are trading just like the NQ normally does. The NQ on a relatively slow day, that's what the Russell and the YM are trading like today. Look at all the bars that we had in here this morning. That is a ton of trading. All right, here we are. Here we are now. Our very first trade here on the Russell was RTY, and we had somewhere, we had a plus 20. I don't know where it is, but we had a plus 20 was our first trade on the Russell. And I'm pretty sure that's where we got our goal for the day. Not positive. No, we got our goal for the day on the NQ. And we had a plus 20 on the Russell, and then we had a stop out right here that brought us down to 10. Then we had a break even, and this had some news come out right there. And then we had some blue arrows in there, some one good, one bad right there. I didn't have a lesson plan for today, so I didn't have to break through the lesson plan, but we went from 10. Then we stopped out here, and I have it down to -2. Oh, we lost 12 ticks on that one. Okay, so we went to -2 on that. And then after that, we had this, and that put us to +12. So we had a 14 tick win there to get to the +12. Then another small win after that. Somewhere. And I guess we went right through it all. I don't know where they all are, but after that we had we went from +12 to +16, and then +16 to +33, and then +33 to +41. So there's some arrows that I neglected to put in here. There's one right there. If I crunch it up, maybe there they are. Okay, there are all the arrows. So we stopped out there. When we stopped out there, that put us to -2. Then we had something that got us to +12, then to +16, then to +33. And there's another one missing that got us to +41. We ended up with +41 on the Russell this morning. So during the break, there was one nice blue arrow right there. One there that would have been a break even. Keep going, and that was about it. All right, the ES, we didn't have a ton of trades on the ES, just a couple actually on the ES. And the ES, we shouldn't have to scroll too far back. There's a break even. And that one, let's go back. The very first one we took on the ES, I think, was right here. We got one tick on that, right? And when I took this one, I had the sensitivity set wrong. I would have taken it in no trade zone like that, but it was a green arrow without the sensitivity set wrong. It was a green arrow right there, and I took that, and I got one tick. And then I took this one over here, and I got 12 more ticks. That put us to +13, and took a break even right there. And let's see. During the break, there was one blue arrow here that would have been a break even for me, and that is all. It's working on this green arrow right now. Right, working on that green arrow off the ribbon right there now. Right, and now the NQ. Let's take this and scroll all the way back. On the NQ, we had didn't have a ton of trades on the NQ, but the NQ is going to have a ton of bars. It was really, it probably is still trading really thin. That's why I had stopped trading it today and yesterday. You're trying to fill 19 contracts and all you can see on the bid and ask is like 8. You're going to get at least 4 or 5 ticks of slip. So it wasn't even worth trying to with 19 contracts. Here we go. All right, so moving it up, punch it down, and our first trade was right here. That was a break even, and our next trade was right here. That's where we got the goal for the day. Got plus 30 on that one, plus 30 on that one, so we're at plus 60 at that point. And that's just about when I decided to not trade it anymore. Bring up the question box. I hadn't had the question box open. Amen. All right, so I didn't trade it anymore for a long time, like until near the end of the session. So you see in all these blue arrows in here that they were all there. They may have been tradable with one contract. You still would have gotten a ton of slippage even with one contract. But there was no way I was going to try to do that with as many contracts as I'm doing. It just would not have made sense. All right, I mean, even right now, if you look at this, see how it's under 19 often? That's the total that's in view right there. That means if I tried to place a trade, it would take up all that. So that much slippage plus more is what I would get. So I'm still moving sideways here, showing all the trades that I didn't take because the NQ was trading so thin. It's like we're on the wrong month practically. All right, here was the last trade, and we got a plus 4 on this one. There was one more trade, I think, right there. We got a plus 4 on that one. I ended up with a minus 1 on this. During the break, there was a blue arrow here that would have been okay. A blue arrow here that would have been okay. Here would have stopped out. And that would have been okay. It would have been a break even. That would have been a plus 30. That would have been probably a stop out. Probably another stop out there. Took it. The outer bands are flat. That would have been a plus 30. That would have been a stop out. Stop out plus something. The stop outs, if the outer bands are flat, I wouldn't normally take them. Okay. Like this one right here. I wouldn't normally take that because the outer bands are flat. I wouldn't take that because the outer bands are flat. All this stuff right here, I probably wouldn't have wanted to do until it actually started to trend. So that's it. That was the learning session. There was a ton of opportunity excluding the NQ. I mean, if you include the NQ, there's even more, but if you exclude the NQ, there was still a ton of opportunity this morning. Now, as we go into the next part of this, I'm not going to trade the NQ. I'm going to leave the NQ off. I'll trade the ES, the Russell, and the YM. There's plenty of opportunity in these 3 markets today. Let me go through the spreadsheet one more time as we get into the YouTube crowd here. This morning, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, it took 3 minutes and 2 trades. 3 minutes and 2 trades to get the goal for the day. Okay, and this morning we made 63 ticks on the NQ, 41 ticks on the Russell, 37 ticks on the YM, and 13 ticks on the ES, putting us at 867.5 on the morning session. Right, we had 26 trades in the whole morning. When we got the goal for the day with 19 contracts on, we're up $2,850. That is after 3 minutes and 2 trades. On the month now, we're at $9,675 with 1 contract over 18 days, averaging $537 per contract per day. We're now at our 300th business day since our last red day. 300 business days. How many days is that? That brings us back until it's going to be in 2023, right here, I think, in 2023. May 9th of 2023. So it's more than a year. It's like 14 months, just about. Is that right? right? May, June, July, almost 15 months since our last red day. Now we've had yellow days and blue days, which means we either didn't get the goal or we gave it all back. Now a yellow day means we ended positive, but we didn't get the goal. All right. I want to throw one more other thing out there as we go into the weekend and we get into next week. We had the PCI come out today. Right now, I don't normally look at the news stuff in here too much, but looking at the economic calendar, we had PCI come out today, and I just want to go through this little bit of information here. Between the stuff that came out yesterday and the stuff that came out today, it's basically saying that people are running out of access to money. And that means they're running out of money and they're running out of credit. That's what all this is saying right here. Okay, so when that happens, nobody can buy anything anymore. And if nobody buys anything, well, I don't know, it's looking pretty dire anyway. But you can see in here the personal income dropped more than, well, okay, the personal income was at plus 0.2, which is half of what they were expecting. Half of what they were expecting. And last month they revised it up. Right? This is half of what they were expecting. So personal income went down dramatically. So income is going down, inflation is going up, and nobody's got any money or access to credit anymore. That's a bad scenario. And right here, the price index. So the cost of goods is going up. Consumer prices. The cost of goods is going up. Our income is going down, and nobody's got access to credit. It's a horrible, horrible situation. Even if Trump, hopefully he will, knock on wood, get elected. But even if he does, he's going to have a hard time getting us out of this mess. Which is why if you learn how to trade, you can make money when the markets are going up and the markets are going down, right? When the markets are going up and down, you can make money. And so all this stuff is just on the periphery. It's just on the side because you can be making enough money from your trading to not have to be concerned so much about that. We do next week have a bunch of high impact news that's going to be coming out. All right. For the rest of the month, though, we should have, we have job openings coming up here. This is on Tuesday. We don't really have anything on Monday that's high impact. But on Tuesday, we have a little bit of high impact left. And the end of the week, Thursday, Friday, next week, we'll have a ton of high impact news. All right. So it should be a pretty volatile week next week, too, for all of you guys who are traders. I probably won't be trading the NQ much next week either. Right. So I said all that to say this. We are now coming out of a no trade, or we're in a no trade zone here, here, and here. All three of these markets are in no trade zones right now. While we're waiting with those in no trade zones, let's look at Bitcoin because that was making a little bit of a run. And people are gonna go to alternative sources of money. They're gonna have to start doing something. This should, once it gets up above this level right here, it should over the next week or two probably get up here. 73,861 is what I'm thinking with Bitcoin. Okay, that is my thought with Bitcoin. Now there was one other thing that I was looking at earlier in here, and this was the NQ30 range. It was given signals. Let me put the bias back on here. Put the bias back on. Now I took the mid-trend trade off. But with the bias on, right now the bias is on the bullish side right here. And we had some pretty good signals in there. This last one really didn't go anywhere. It actually hasn't stopped out yet either. It's got one more tick down to go to stop out. But it really hasn't gone anywhere yet. But if you can get in there and get into one of these trades and get 30 or 40 or 50 or 60 ticks in a single trade, this is how you would have to trade it. You can't trade it on a really small time frame because you're just going to get a ton of slippage. You would have to trade it on a much larger time frame. And one thing I wanted to throw out there for you, if you don't want to trade it on a much larger time frame because you don't want to have the risk, if you want to go, instead of having it on the 30 range, put it on like 100 range. Okay. Now you don't want to risk $500 on every trade, but if you go to the micros, you'll be risking $50 on every trade, right? And every bar is still $50. Every bar that it goes up is still $50. Right? Think about that. The commission is actually less, and I'm just giving you options here. All right, if you wanted to still trade the NQ because of the volatility that it's offering right now, that is one way you can do it. If you were to go to a micro on 100 range, every bar then is $50. All right, so you could have, your stop would be like $60, whatever that is, 120 tick stop. Your stop would be like $60, but you'd have like a 500 tick target on it. And that is one way that you can trade the NQ now with the current market conditions that we have, where it's bouncing all over the place like crazy. That is one way that you can trade the NQ now and be profitable with it. Right? You can trade 2 or 3 of those micros if you want to get your risk where you want it to be, the dollar amounts where you want it to be. Right? I just want to offer up solutions in market conditions like this, where we have the NQ. As crazy as it is, you could also do other things with this. You can buy QQQ options and stuff like that. There's a lot of ways you can do this. But with it as trading as thin as it is and as volatile as it is, like back here, I guess, if you would have just gone long here on this blue arrow, and you had, your stop would have been down below here. In this case right here, your stop would have been down below here on the blue arrow. You never would have stopped out. And if you were using leg lengths, I don't know what it actually looks like in leg lengths right now, but if you're using leg lengths, the leg length would have been over here. Leg lengths was on Wednesday's lesson plan. But if you're using the leg lengths from Wednesday's lesson plan, then this is what your leg length would look like, right? And that would take effect starting right there. So we still haven't hit the end of that leg length yet. Okay, if price is going to do what it normally does and complete the leg length to complete the trend, continue the trend, then that's what you would expect out of this. Right, you would have been expecting that from this long trade back here. You would have been expecting that. Right, just throwing some alternatives out there for you guys. You can still play the markets. You still play the NQ if that's what you like to do. You can do it with the same or even less risk than you would normally have. If you're risking 20 ticks per contract on the regular NQ contract, risking 120 ticks on a micro is actually $40 less per contract. And if you look and make 200 ticks out of it, that's $100 per contract. Or if you're making 300 ticks, that's the same $150 per contract you get for risking 100. Or in this case, if you have a $60 risk and you want to make $150, it'd be 300 ticks. That is not unreasonable in any way, the way that the NQ is trading right now. Okay, I wanted to point all that out for our listeners and traders, because you can do that, and whatever it is that you use that gives you a trade setup. Now right in here, that was TV trades that I was using there for that stuff. But if I throw on, if I get rid of that and I put on the TIQ context PP right here, you have the same stuff in here with the context PP. I don't have the context PP set up properly. It doesn't look like. Let me just throw on a fresh one that I have everything on there by default. It'll even have the sensitivity right. If I throw on a fresh one. So you had a nice green arrow way back here. This green arrow was way back here, and the stop on that would have been down here on 100 range. And that's all you need. All right. Okay. Context BP. This is the same context BP with no stuff on it. All right. Let's go back here. So the YM, I mean the NQ now just gave these 2 green arrow long trades right here. That has absolutely nothing.
That last NQ chart, that was 100 range.
It sure was.
Okay.
Yep.
All right.
So 100 range NQ is right here. So 100 range NQ, and if you just throw the context PP on there, which I just had.
Yeah, no, I saw it.
Here. Yeah, okay. But that is a great alternative now that they've given us micros. Now those micros have been around for about a year now, and there's pretty good volume in the micros. There's enough volume to trade 2, 3, 5 contracts. You're still going to get slippage with the NQ. You're still going to get slippage. Even in the micros, you're going to get slippage. But there's enough volume and volatility that it gives you great opportunity there, right? All right. So back in here, we're still in no trade zones everywhere. So I did not waste any time by not looking at this because we haven't had a single trade execute from these. I guess we did. Right here, we had a couple of green arrows here on the NQ. But as I said, I'm not trading the NQ, at least not in this time frame. Okay. All right. So, does anybody have any questions about anything? Chris, I will have to send you a link. You'll have to create that link and then send you a link. I'll send it to you in Telegram, okay? And anybody else, if anybody wants to meet with me and anybody has any questions, I don't know if anybody who's in here is on the trial this week. If anybody's got any questions and you want to meet with me, just let me know. You all have my number, I think. All right. So here's a blue arrow short. Now the outer bands are completely flat. It is the NQ. I'm not doing anything with the NQ, but when the outer bands are completely flat, I don't like to take any trades. Even the purple arrows. I'll do the purple arrow if the ribbon is spread out. But usually when that's flat, the ribbon's going to be flat too. Okay, this ribbon over here was spread out. That would have been an okay purple arrow for me. It would have stopped me out just about right now, but it would have been okay. But you see the outer band over here on the YM is flat. The outer band on the S is flat. It's like everything's getting tired, a little bit worn out right now. I suspect, though, at the end of the day, I'm trying to think of what I have going on at the end of the day today. Really good meetings, but I'm looking over here at my list, and I have one. But yeah, that is all that we have going on. All right. Well, let's go here and back out here and look at other things on a larger time frame. Now, I said consider the micro, so let's look at what the actual micro looks like. Micro chart. Okay. This is what the actual micro chart looks like. So it is basically the same thing. Having the same indications. This is the same TV trades. This is having the same indications, the same targets, same triggers, the same everything. All right. And let me see what that looks like in a DOM. Hold on, I don't have one of those open, but let me open one up. Close one of the DOMs. Micro NQ. Hey, there it is. Opened right up. Okay. So the Z contract doesn't look very good at all. That was on the Z contract. Let's look at the U. Here's the U. Okay. So the U contract actually looks like, here's the MNQ U. And if I do not show break even, I would do auto sum bid and ask. I don't need that. I don't need that. I don't need show tooltip. Let's do that. Okay. So let's look at that compared to the full contract. Here's the full contract. Look at, there's better liquidity in the micro. How crazy is that? So you're better off trading 10 micros to avoid the slippage than you are one regular NQ. That is just craziness. I hadn't looked at that yet until just now. I mean, that's a real thing, but I just said there was a real thing. You could trade 10 micros and have the same result as you would over here without the slippage. And the slippage is the difference in commission right there. Now, if you slip one tick or 2 ticks over here, that's $5 or $10. And that would be the difference in commission between trading the different contracts. That is pretty wild. I hadn't even thought about that. Look at that. Wow. All right. This is the regular NQ. Put that back where it's supposed to be. Okay. And put the micro back over here where it's supposed to be. Actually, I don't need a micro. I'm just going to close that one. But it does make sense to trade 10 micros compared to one regular one. Get the same result per tick without the slippage. And the commission's about the same, probably. All right. Well, I've really focused on that today, haven't I? Hopefully that has been helpful to anybody, somebody. The Russells finally moved out of the no trade zone. We might get a trade here on the Russell if it pulls back. Right. We'll look for that opportunity. I don't have the YouTube open right now, but I don't know if any questions have popped up in YouTube. Okay. All right then. That is a real thing, though. We had a good week. I went through this morning the totals in the week. You know, we made a bunch of money this week trading, like $3,700 or something like that with one contract trading. And anybody that's been in the room in the morning, you know that I don't trade for the full 2 hours in the morning. And lately, it seems like I've been talking more and running over my normal allotted time to trade. But we still had, you know, there's been enough volatility that we had plenty of opportunity. Look, we finally got over 900,000. We're going to be able to hit that number, 7 figures, by the end of next month. I wanted to hit that by the end of the 24/20 blueprint. By the time I got done with the 20th month with 20 contracts, I wanted to hit that number, and it looks like we're going to do it. I was worried about it when we were in here because it was at like 500,000 or 600,000. I was worried about it, but we had some months that were, we had some months in here that, that one right there, but we had some months in here where, you know, we made less than the prior month, or every month we should make significantly more than the prior month. But this was significantly less than the prior month right here. And this was what, May? And then June was just barely more than that, significantly less than the prior month again. You know, that was our best month. April was our best month, but we went down quite a bit from there, 40% in both of those months from the highs that we had in April. So I was a little bit concerned that we weren't going to be able to make it, but it shouldn't be an issue as we wrap up next month. Next month is a special month in a lot of ways. All right, on the NQ, we want to pull back down the test ribbon. On the Russell, we want to pull back down the test ribbon. And over here on the ES, well, hopefully we'll get a trade off here. We have 1 minute left. I'm not going to do anything with the NQ. I don't think we're going to get a single trade off. The YM and the Russell both have trade setup potential right here, but neither one of them is actually got a trade setup yet. All right, and I do have another meeting coming up, so I can't run over on this. NQ is the only one. Now, I'm thinking. It's just me thinking here. I closed it. Darn it, I closed it. I'm going to go open it again if I can. Micro NQ. Here it is. Micro NQ. Okay, so we have a low right here of 84.25, so we're going to have 88.25. Ah, crap. Put two of them on. Oh, it's too late. I missed it. I was going to try to put multiple contracts on the micro. You can see my DOM's not normally set up. I had done ones instead of 19s. Anyway, over here on the YM, we have a chance here. We have a chance. There it is. Yeah, it's a black arrow. No, this isn't the best black arrow. I mean, I'm sorry, it's not a bad black arrow is what I'm trying to say. It's not a bad black arrow. This is one of the ones that I would try to get in on a pullback, but I took it anyway. It almost hit the ribbon right there. It almost hit the ribbon. That's why I would try to get in that one on the pullback right here. I didn't get in on the pullback, but how a pullback half the bar length right there. I would try to get in right there, because then if it pulled against you, you would have the whole ribbon to bounce off of. All right. Now I just got to break even on it, but it would have the whole ribbon to bounce off of. All right. Well, I am going to wrap it up now. I've gone over just a little bit. We finally had a chance to take a trade. If you are going to read the spreadsheet, you got to read all 60 risk disclosures. And at the bottom, today is the 26th day of July, 2024. Made 63 on the NQ, 41 on the Russell, 37 on the YM, and 13 on the ES. That puts us plus 867.5 on the morning session. Today took 3 minutes and 2 trades to get to the goal for the day. That brought up $2,850 and to a total of 26 trades in the room this morning. Is that the most we've had this month? Nope, we had 29 on that day, but that was a Friday too. 7/12, but it was a Friday. Yep, it was. Fridays I had to take more trades because I don't have the listen plan going. Anyway, on the month we're at $9,675, averaging $537 per day, and on the year we're at $56,760, averaging $411 per day. That is with one contract, all right? And that's it. If you have not taken a free trial and you want to, go to mytradingiq.com, click this button right here that is getting registered for next week's room. All right, but if you click it now and down here at the bottom, you give us your niche trading machine ID and or your TradingView login ID. We will get your indicators indicated for you today. So you have them over the weekend and all of next week. All right, and that's it. With that, we can pass it back out to fabulous Phoenix, Arizona. In Studio A, overlooking the South America's largest city park.
All right. Recap of the morning session.
3 minutes, 2 trades, $2,850.
Fantastic Friday.
It was indeed.
Okay, guys, we'll pick up where we left off. Oh, by the way, I did get an updated Logic 247 recap while Michael was on. Valerie was kind enough to send that over. We're in week 312. Over those 312 weeks, we've issued over 17,300 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 104 alerts. I can't remember the last time we broke 100 alerts. 15 never triggered. Still waiting on the outcome of 17. So we had 72 actionable alerts, of which 11 or 15% would have been stopped out based on market structure. In that very simple process we teach all of our passport holders. Now, for those of you that may have tuned in late, let me show you this. The concierge trade alerts came out last night, 5 minutes after the open, 6:05 p.m. Friday session begun began Thursday night, just like the Monday session will begin Sunday night at 6 p.m. Eastern. So all of our members and trial members had every one of these targets 5 minutes after the open last night. Now we've already gone through the indices, so I'm not going to spend a lot of time on those. I'll just point out to you where we are. Of course, we hit the long target, well above the lowest weekly zone for the week, and the market is pulling back to this zone. The 4 windows of opportunity that I drew yesterday live in real time on this very broadcast, you can go watch it on youtube.com/CFRN. All 3, in fact, right here, all 3 filled in one fell swoop. We filled, we get a leg, and this is how markets work. You get a leg, you get a retracement, you get a leg, and then when price will go no lower, you see we have a double bottom from yesterday. Then you start building legs in the other direction. Leg, retracement, leg, retracement, leg, retracement. Pull back to the BBC holds more often than it doesn't. We got almost to the highest, or not the highest, but the next weekly trading zone at 55.32. We're now pulling back into support at the weekly zone 55.06/07. The step line is in the process of crossing blue and climbing, so it looks like we're going to get a pullback all the way to the BBC. The question then becomes, does it hold or not? If it holds, then you can trade 55.04 to 55.06, grab your goal for the day. If this pullback, for whatever reason, does not hold, okay, make sure you're aware that you've got potential support here, 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 and of course here, where we have the double bottom. Now, as you can see, we talked about the step line being potential support. Last night in the workshop, we talked about this line here being potential support, and it was until after the opening bell this morning. That's when we popped up to the step line, which we expect to be resistance until proven otherwise. So we've come off the high of the day, and we're coming off the high of the day, as you see right here. Okay, but we expect the pullback to, even when it spikes it, as long as the candle is still touching the BBC, that's the green line, stands for bull bear cross. When prices below the green line, we're bearish and anticipate lower prices. Price always reverts to the mean. In our case, the mean is green. Call it the BBC, bull bear cross. When price gets above the green line, we're bullish and anticipate higher prices. You can see yesterday's high was at the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Next week's zones will come out Monday morning at 6:15 a.m. Eastern. This December will mark 15 years that we've published the weekly trading zones for our members. Once you truly understand how price behaves, is attracted to the weekly zones, they'll become one of the most important tools in your trading toolbox. So we'll check back, and maybe we don't have to check back. Let's just wait a minute. This thing's dropping pretty quick. You know what? We need to keep, yes, it's got the same thing here. The step line's already crossed. Okay, step line is already crossed, blue and climbing. So expect price to retrace to the BBC. Now, this would be what we call support times 2. When price drops to a zone, we expect support. When price drops to the BBC, we expect support. As you can see, yesterday's high was at the zone. Yesterday's low at the zone. Only 3 things happen at a zone. 70% of the times consolidation. 20% of the times rejection. 10% of the times the slice. See how this 30-minute candle sliced through the zone like it wasn't even there? When it ran out of steam, it retraced back to the zone it sliced through and continued in the direction of the slice. The Russell. Here's the open last night. We overcame red and falling. Red and falling turned to blue and climbing. And off we go, right up to the zone. Or not the zone, I'm sorry, the target. We consolidated the target for quite a few hours. And then, over the course of 1, 2, 3, 4, and part of that candle, we hit the highest weekly trading zone for the week on the Russell. Now, I want you to understand that the highest zone or the lowest zone, when we publish the zones, we're not saying that we expect price to go to the highest zone or that we expect price to go to the lowest zone. Really, what the zones do is they give our traders a playing field. Think of a football stadium and you've got a seat at the 50-yard line. You look left, there's the 40, the 30, the 20, the 10, the end zone, right? You look to the right, same thing. So basically, this is telling our traders ahead of time, where do we expect support? Where do we expect resistance? We trade every market exactly the same. Now this candle has traded through the VBC. We had a little blue and climbing there, but if this 30-minute candle, which has 18 minutes left in it, if we close down here, that little blue is going to hook down and go back to red and falling. Okay? Unless something unusual happens, we have seen the high of the day and the week on the Russell. In Q, open. We closed at the zone, opened at the zone. Got a leg, a retracement, a leg, a retracement, leg, and a retracement. The pullback held, and we hit the target. Now, there's no reason to even think about the short target until price gets below this zone and below that low. From there to the targets, plenty of room to get your goal for the day times quite a bit. All right, crude oil. We opened and just ground sideways last night. And then we popped up 78.33 up to 78.60, $270 per contract traded in that candle. If you've earned the right to trade 10 contracts, then multiply that times 10. Just make sure that you don't become a member and start trading live right away, because you haven't learned the methodology or the strategy yet. You gotta humble yourself and trade in your demo account until you put together 10 consecutive days in a row. You reach your goal in 10 trades or less. Only then do you think about going live, and you only go live with one contract. I explained all that earlier. If you missed it, you can go to youtube.com/CFRN when this broadcast ends and check it out. Price drops below the green line, giving us a bearish cross. That's when the red line gets below the green line. Now look here at the zone. Consolidated. Now, this little candle here opened below the BBC. It opened at 78.18 and dropped to 77.95. So from 18 to 95, that's $230 per contract traded. The 10 contract trader, that one candle is $2,300. And then we hit support. And we consolidate. Remember, that's what happens 70% of the time. Consolidate for hours, and then we drop. We get through the zone. We trade through the target. And today's low is based off yesterday's low. Now this is Friday. The vertical lines separate the days. I'm sure you know that. Friday, Thursday, Wednesday. This window of opportunity, I hope for obvious reasons, was drawn in live during the broadcast. Now, Friday, Thursday, Wednesday. The window of opportunity was drawn in Wednesday, but it didn't fill until Thursday. Price opened below the BBC. We had red and falling, only thinking short. And so from 77.40 down to 77.20, that window of opportunity is worth $200 per contract traded. Now, get below the zone, run out of steam, we retrace to the zone we sliced through. This really isn't a slice, it's more of a consolidation pattern, but if you want to call it a slice, that's fine. Point being is we dropped below the zone, found support from 2 days previous. Support will always send the market to resistance. This is resistance times 2. The BBC and the zone. Which drops us to here. Now, you can go way back and understand why the market found support here. Everything you need to know is in the chart. Okay? And that's the purest information you'll ever get. Not some guy yakking on the internet. Learn how to read the chart, and then you don't need some guy yakking on the internet. Okay? We sliced through, retraced, off we go. Come just shy of the target, but ample room to get your goal for the day. Then after this consolidation, there we go, to the support created yesterday. Now for many of you, that's probably a foreign concept. Well, I'm trading today. What do I care about what happened yesterday? Everything. Now, we're printing a red candle. We're at the zone, which is support when price is coming down. As you can see, this pull up to the BBC, the pullback hell, pulls more often than not. So we've come down through the zone to touch the target and bounced right back up to the zone. The fact that we've got blue and climbing here, if price trades below that short target, make sure you're aware there's potential support here. So on the short side, window of opportunity is going to be here. We'll call it 76.55 to 76.40. That's $150 per contract traded. For the 10 contract trader, that's $1,500. Now, what if buyers come in at this area of support? Remember, we got blue and climbing here, which is bullish. This is resistance. Balloon climbing is bullish and or support. So let's say price takes out this high right here. Doesn't matter which way the market goes. If the market has to move a certain way in order for you to be profitable, then you need to rethink your strategy. Okay? $78.60 to $78.85. $250 per contract traded. So let's say I'm a crude trader and all I want to do is trade crude. Okay, I've already mapped out my work. I don't want to trade any of this noise in here. If price continues to drop, I don't know if balloon climbing is going to hold as support. We expect it to until proven otherwise. But if price continues to drop, we've already mapped out our work. If balloon climbing provides support and we get back above the BBC, we already know what we're going to do, when we're going to do it. We just have to wait for price to get there. Now, the mechanical model and discretionary trading are two very different worlds. But you must learn the mechanical model before I can teach you discretionary trading. We opened and ran into some resistance at the BBC. Pullback holds more often than not. Then we get a push to the downside. Now that low, there you go. Buyers come in, bid us up, get us above the BBC. Now, this zone is 2368/69. We sliced through the zone, and then we retraced. What's the low of that candle? Exactly 2369. So again, when a slice runs out of steam, price will typically retrace to the zone it sliced through and continue in the direction of the slice. So as it pulled back to the zone, which is 2368/69, if you chose to get long on the open of this candle, let's say you waited that long, okay? This candle opened at 71.5 and ran all the way, let's just call it 72. Ran all the way to 78. $600 per contract traded in that one candle. Now, when the market runs into resistance, as defined yesterday, it's going to go look for support, which it found at the zone. When balloon climbing gets directly above price, it becomes resistance because it's probably on its way to becoming red and falling. So support sends us to resistance, which sends us back to support. Now we got to go find resistance. We found it at red and falling, but we finally overcame it. And the key is when red and falling turned to blue and climbing. And then we made a run. This candle opened at 72. Well, we'll call it 73. Ran to 81. $800 per contract traded. And then it continued on to the zone that was published Monday morning at 6:15 a.m. Eastern. Resistance sends us back to support at blue and climbing, which sends us back to resistance at the zone, which is now sent us back to support at the target, What was once resistance often becomes support. I suspect that we will, because the step line has crossed blue and climbing, I wouldn't be too crazy about going long here. I'd rather see price come back to the BBC and then give me a candle that opens and closes above the BBC. Then I'm long up to the zone. Silver. Here's the open last night. We're below the BBC, so we expect lower prices. And we got them. Took us down and through the zone to support that was defined yesterday. Once, twice, 3 times, 4 times. I'd say that's a pretty good support level. The support's always going to send the market looking for resistance. See it? Resistance will send it to support, back to resistance, back to support, back to resistance, over and over again and again. Never-ending cycle. And here's the open last night on the euro. I've become disenchanted with the euro. I may remove that from my lineup. It just doesn't give me enough movement in a day to put out decent logic alerts. So if any of the members want to, oh, you got to do the euro, I can't live without it, let me know before Sunday night, because I think I'm going to send it packing. It's not that the same things don't happen. Everything happens exactly the same. We trade every market exactly the same. This high right here, areas right there. Price pulls back to the BBC, it holds, goes up to resistance, then goes looking for support. Does all the same things, but there's just not enough movement for you to get in a good trade. So that's why I rarely publish a logic 247 alert on the euro. So anyway, here we are on the daily. Got resistance at the step line. We're in the process of getting a bearish cross. If we close where we are now, or below the step line, when we open Sunday night, we will officially have a bearish cross. Last time we had a bearish cross, be April 12th, April 11th, April 12th. See where the red line got below the green line. And then when the blue line got above the green line on May 8th, leg retracement, all-time historic high. Now we're drawing legs in the opposite direction. That's how markets work. That's how price moves. Rarely in a straight line. From the largest time frame possible to the smallest time frame possible. It's leg retracement, leg retracement, leg retracement, until finally the pullback doesn't hold. But as we moved up, the pullback held. And it sent us down to the 38% fib retracement. So all the institutional traders are going to bounce on that, are going to jump on that, and we're going to get a nice bounce. Okay, we talked about this a lot in the workshop last night. So if you're a member and you missed it, you know that you can always go and watch it in the workshop channel. Okay. All right. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI. If you don't get a live voice, leave a message. Somebody will get right back to you. You can email us anytime, support@cfrn.net. Nine out of 10 new traders fail because they do not have a teacher. Which is why we provide you with a teacher 2 hours every trading day from 9:30 a.m. to 11:30 a.m. Eastern. It's an interactive environment. Now, a lot of times new people, especially people on a trial, they're embarrassed to ask questions because they think somebody's going to judge them. Number one, nobody sees what you type except me, Michael, Valerie, and Bert if they're logged in. Okay? No one else in the room sees what you type. The way you learn is by asking questions. Very important. Now, becoming a member or a passport holder does not guarantee you're going to become the 1 out of 10. You're going to have all the information you need, all the support you need, and the tools you need. But what you do with those, we have no control over. Are you going to follow the rules? Are you going to take the 24/20 blueprint and seriously write your business plan? Seriously write your trading plan? We don't know, and we can't make you. We didn't put it in the blueprint. Now the blueprint walks you through creating it step by step. But we're not going to create it for you. You got to create it for yourself because it's your trading business. And it is a business. The more you treat it like a business, the more it will act like a business. Every successful business in the world has a written business plan. They also have an operational manual. Two very different things. Your operational manual is your trading plan. Okay? It's not something you do in an hour or an afternoon. While you're working in demo to put together those 10 consecutive days in a row, where you reach your goal in 10 trades or less, that's when you should be working on your business plan and your trading plan. Okay? Along with 2 hours of live interactive training every trading day. As a passport holder, you have access to private one-on-one mentoring at no additional charge. The strategy you learn and the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF. Price flows the same across all markets and time frames, from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. Get the concierge trade alerts every night when they're published. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. You'll be able to attend the members-only workshop on Thursday night. And you'll enjoy around-the-clock support via Telegram. Everything a trader needs, all under one roof, at one low price. I don't know how much time and treasure you spent or how much you have left of either one. But I promise you this, the only holy grail in the world of trading is finding someone willing to teach you how to trade. That's who we are. That's what we do. Okay, good word for the day. Now, for the last 3 days, we've been talking about theory or truth. Today, we're going to talk about something a little different. Showing grace towards those who are different than you. 2 Peter 3:18. But grow in grace and in the knowledge of our Lord and Savior, Jesus Christ. Think how much happier and more energized you would be if you weren't trying to control people and straighten them out. Allow your loved ones the dignity of making their own mistakes and learning from them. If you're always getting into someone else's business, you're not only going to burn out, you're hindering God from working in their lives. They belong to Him, not you. Now, in the previous business I owned, that was a very difficult lesson for me to learn. That company was a company that only hired people in recovery, people fresh out of prison, the chronically homeless, and some with some type of mental deficiency. In other words, the people nobody else would hire, they came to us. What a great time in my life that was. But I was dealing with troubled people. My currency was broken lives. And there was one fellow in particular. His problems and addictions were deep. But his ability to do the job and generate revenue for the company, extraordinary. I was always paying his rent, paying his phone bill, giving him an advance midweek, whatever. And one day God spoke to me about it. He says, because I was in my office praying, God, how can I help Larry? I've tried everything. And he spoke to me clearly. Get out of my way. I'm like, well, what do you mean? I'm your hands and feet upon the earth. What do you mean? Get out of your way. The Holy Spirit spoke to me and said, every time I just about have him to his knees, you slide a chair up under him. Man, it was a life-changing moment because I realized it wasn't just happening with Larry, God rest his soul, but I was enabling a lot of people in the vein of trying to help them, okay? And I'm not saying you shouldn't be kind and you shouldn't help people. Yes, that's what we do as followers of Christ. But there comes a point where you got to draw the line. As long as you continue to enable someone to do the wrong things, they're going to continue to do the wrong things. Now, as I said, he generated a lot of revenue for the company. So was perhaps me sliding that chair under him every time God was trying to bring him to his knees. Did I have an issue? Yeah. And I'm so thankful that God opened my eyes and and taught me that not everyone who walked into my office asking for help, it was like a revolving door. Not everyone that came into my office asking for help was sent by God. I learned that the enemy could send people too. The story sounded good, but the enemy was trying to drain me financially, spiritually, because as a company, we were changing people's lives. I had an office full of people who had health insurance for the first time in their life. I had people who hadn't had a full grill in 10, 20 years. And now they had a full set of pearly whites when they smiled. We used to take 30 minutes every day on the clock and just gather. If there was 50 of us, we would gather in a big circle. We would talk. And we would all take turns sharing. Plus, we had 12-step meetings that people could attend on the clock. I mean, we were really a unique company in so many ways. And that was for a season. It was during that season that we opened our home for men recovering from alcohol and drug abuse, our home for battered women and abused children, our mission down in Mexico, the orphanage in Kampala, Uganda, 24 years ago. We had no clue what we were doing. We just knew that God was speaking to us. And I've told the story before, and I won't go through how we ended up meeting Pastor Chris and his wife. And I have a young man who lives in my home now with my exact name. He's got my first name and my middle name. He's my namesake. When Agnes was pregnant with little D, as they call him, he's actually bigger than me now. We flew her to America, and little D was born at St. Joseph's Hospital and has a U.S. birth certificate and U.S. citizenship, U.S. passport. I held him in my arms that day he was born. I remember, but he doesn't, of course. And now he's struggling with trying to go from being a teenager to an adult. And you know, being a man has nothing to do with some numerical number. Oh, you're 18, now you're an adult. Well, yeah, according to the law, you can enter into a legal contract, or you can get thrown in jail, or you can go join the military. But I've known men older than myself that I would not call a man. And I've known young teenagers that were so mature, so far ahead of where I was at that point in my life. And I know I've strayed from my topic, but when that happens, that means somebody in the audience or somebody that's going to watch this broadcast later needed to hear that. Let me pick up where I left off. In the New Testament, when legalistic Jewish believers tried to impose kosher laws on Gentile believers, Paul wrote in Romans 14:3, Those who feel free to eat anything must not look down on those who don't. And those who don't eat certain foods must not condemn those who do, for God has accepted them. Sometimes in trying to be holy, we come across as harsh. Just because you don't feel at liberty to do something clearly prohibited in Scripture, it doesn't give you the right to condemn those who do. Having strong opinions doesn't give you the right to impose them on others. Lord knows I got some strong opinions on certain things. And I try to keep them away from this radio program, because this is about the markets, not about Capitol Hill. Remember, you can have the right theology and still have the wrong attitude. Author Gladys Hunt wrote this: acceptance means you're valuable, just as you are. You can talk about how you feel and why, and someone really cares. You can try out new ideas without being shot down. You can even express heretical thoughts and discuss them with intelligent questioning. Feel safe. No one will pronounce judgment, even though they don't agree with you. Doesn't mean you'll never be corrected. It simply means it's safe to be you. When it comes to the truth, stand fast. But when it comes to non-essentials, like personal preferences, customs, and traditions, let each be fully convinced in his own mind. Romans 14:5. And that, my friends, is our good word for the day and for the week. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.